What is going on, investors? Hopefully, you guys are having a great day out there. Time to talk about Tesla Incorporated, ticker symbol TSLA. The company just reported their Q2 earnings, and we will get into them. We'll take a look at the numbers, the financials, the balance sheet. We'll take a look at this entire Q2 update that Tesla provides shareholders. And then we'll get over the stock chart as well. This thing's moving around a little bit in the after hours, but we talked about this actually on our Friday show, and we always look at the chart of Tesla on our Fang Stock recap show. Talked about how we are kind of approaching like a little bit of a triangle here, and we'll talk about what that means from a technical perspective and which way Tesla could potentially break over the next coming days or weeks ahead. Let's not waste a lot of your time and get into the numbers on the top line, the kind of press release stuff. The EPS beats, and they beat on revenue as well. Revenue coming in at close to $12 billion. That's up nearly 100% year over year. Let's jump into this Q2 update. They've got some things where they talk about it. We're going to get into the numbers, and I'll walk you through these numbers as best I possibly can so you can understand what's been going on at Tesla over the last quarter. On the right-hand column is our Q2. This is the most recent quarter they just reported today, and the left-hand column is a year ago, and then we kind of see a quarter over quarter view until you get year over year. Automotive revenues came in at $10.2 billion. That's up 97% from the $5.2 billion that we put up in Q2 of last year. And we've seen a steady increase in automotive revenues over the last quarter. Now, we did have a decline from Q4 to Q1, but it re-accelerated in Q2. So that is nice to see for shareholders. Now, a lot of people, especially bears of Tesla, focus on these regulatory credits. Those did come in a little bit lighter, 17% down year over year, and certainly quarter over quarter. Those are down as well, but that's really more of a sign that other automobile makers are selling less EVs, not necessarily a Tesla. It could be that Tesla is just gobbling up a ton of market share. Automotive gross profit coming in at, from a percentage basis, 28.4%, and we actually see that's the highest that we've seen over the last 4 quarters. You love to see that they're raising their margins despite dropping some prices on a few of their models. Now, our total revenues with the regulatory credits and other things added in, right at this $12 billion. Again, that's up 98% over the $6 billion we put in over the previous period. Now, we've got other operating expenses here, okay? They came in at $1.572 billion, and we're seeing that's relatively in line with what we've seen over the last 3 quarters. And the fact that you've grown your year-over-year revenues 97%, your total revenues 98%, the fact that your operating expenses have only gone up, and I say only, it's still quite a bit, but you've only risen those 67%. And from a quarter over quarter basis, not much growth at all. In fact, they actually declined. That gives us solid operating margin of 11%. Okay, so this is all in, all your cost. Operating margins coming in at 11%. In the previous quarters, it was closer to 5. We had one quarter we were at 9. That is very strong, and I think investors, in the past would have given Tesla a far bigger reward for this from the share price, since so many people were focused on profitability. Now people are comfortable with the profitability of Tesla and realizing this company is scaling up extraordinarily nicely. Now, they did have some Bitcoin related impairment. We'll talk about that when we get down to the balance sheet. They lost about $23 million, but they had to recognize a $23 million loss on that. Now, I also talked about how the average selling price, or ASP, declined 2% year over year on the Model S and Model X, and those deliveries were reduced as well. And so they lowered prices, but they were able to expand margins, and they obviously grew revenue as well. That, I think, is very, very bullish for Tesla as a company. Now, in terms of their operational summary, we take a look here. Model S and Model X still not back, okay? We delivered, or we produced 2,340 vehicles. That's way over last quarter where we produced 0 as they were kind of transitioning to a new model and those types of things. But we see we're not even close to the 6,000 that we delivered last year, and in Q3 and Q4, much closer to over 16,000 vehicles. So I think think what some investors might be doing is saying, well, wait a second, Tesla's not even firing on all cylinders right now. Wait until they get these Model S and Model X production, the chips and all that stuff kind of comes back, and they're able to produce this vehicle more than they have over the last 2 quarters. That certainly will help revenues and profitability as well. And you obviously have Model 3 and Model Y production just continuing to expand up 169% year over year, where you produce 204 of those vehicles as opposed to about 76,000 in the previous period. Now, the deliveries looking very nicely as well, again, but we're still down 82% on that Model S and Model X. Once they can get those vehicles ramped back up, that should help Tesla fire on more cylinders than it currently is. But Model 3 and Model Y picking up the complete slack, delivered 148% more of those, all things being considered, delivered 121% more vehicles than the previous period. Now, they do have this solar business. We're seeing this is growing, but from a cost perspective, which we'll see here in a minute, it's not a very profitable business and not one that makes a lot of sense for Tesla, although they are stuck with it at the current time. Now, supercharger stations, this does give the company a competitive advantage against other competitors, but we're also seeing that Tesla is going to open up the supercharger stations to other electric vehicles, non-Tesla cars, so that will help them from a revenue perspective as well. They're going to charge these people and likely make a profit on that. We see those are up 46% as well. Now, in terms of their vehicle capacity, they're still working on getting Berlin up and running. We'll see pictures of that in a second. And we're also working on getting Texas up and running. Both of those are going to produce the Model Y, and Texas is also going to produce the Cybertruck as well. It appears on some language here that the Semi is pushed down the road a little bit longer. You've got the Roadster down a little bit further. And I think this future product is an even cheaper car, one that costs, I think, less than maybe $20,000, $25,000. You see market share of Tesla vehicles, by all standards, are moving in the right direction. Now, a lot of things we could talk about with the full self-driving. They're still working on it. They have charged customers for this feature. It just simply is not working. But what some analysts are saying, and I think Elon Musk has kind of hinted to this, is this could be kind of a software as a service. So maybe you go on a long road trip and you want to have full self-driving for a month or a couple weeks. Well, you would pay for that service, and then it's like Netflix. You let your subscription cancel and you don't need it. So, and there's lots of other services that Tesla could probably produce over the air that would, on the vehicle software, that could create more strains of revenue as we move forward. We've got energy storage and solar roof type things. These numbers look pretty impressive, but from a profit perspective, which I'll show you here in a second, not necessarily that great. Now, from a product perspective, this is on the outlook. They looked to remain on track to build the first Model Y vehicles in Berlin and Austin in 2021. So that would be good. Okay, obviously the Model Y along with the Model 3 car are the lower cost cars and are very profitable from that perspective. So you definitely want to see Tesla remain on track in Berlin and Austin to deliver this car. Now, they say they're also making progress on this Cybertruck, which is currently planned for Austin production subsequent to the Model Y. So do not expect the Cybertruck, at least the way this is worded, until Austin comes online and starts building their first Model Y. So that's kind of the timeline that we're looking at. We're looking for and this is Austin, Texas, to start building these Model Ys. Shortly after that, or sometime after that, you should start seeing these Cybertrucks. So if you're on the waiting list like I am, you should be very excited about that at some point. Here's the Gigafactory Berlin. We've got some photos here. These look extraordinarily impressive. Here's a paint shop perspective. I can't believe when we get into CapEx, I think they spent about $1.5 billion. This looks like a lot of money building out these factories. This is Gigafactory Texas, currently under construction. More Gigafactory Texas as well. Same thing here, the body shop. Here's the workers. It looked like it would take way more than this, although we've got some over here. This is probably all they could rather up for the photo. We've got Gigafactory Shanghai. They are expanding this at the current time. And now we've got vehicle deliveries. Again, on a steady increase. We saw a little bit of decline heading into last year. It was kind of expected, and now we've completely ramped that up. And from a profitability perspective, Tesla is firing on all cylinders as well. We've got vehicle deliveries. Again, these could be even better once they get Model S and Model X deliveries back on track. These deliveries and these numbers, believe it or not, could get even better. Now, onto the statement of operations. We've got our automotive sales up here. We've got our total revenues. What they are doing is they're breaking this down. So we have this $11.9 billion. We talked about this was the total number that they put up. Well, they break it down. They got automobile sales. They've got some leasing in here. And then they've got this energy generation and storage. This is why I kind of blew over the solar business is they had $801 million in revenue. Here's our cost of those revenues. Here's energy generation and storage. Well, we spent $781 million to make 801. So all things being considered, relatively or extremely low margin business. You do see the gross profit off of this $11.9 billion. You gross out $2.8 billion. And then you've got R&D, which actually has been very much in line. You've got selling, general, and administrative to drive this kind of growth to go from $6 billion in revenue last year to basically $12 billion and actually spend less on a quarter-over-quarter basis on selling, general, administrative. Just shows you the power of this brand in these cars. And this is why so many investors are very, very bullish Tesla stock. Our total operating expenses coming here at Tesla at $1.5 billion. That's actually less than where we were at last quarter and in line where we were at 2 quarters ago. And yes, it is up year over year, but you would expect that when you grow these revenues this amount. All things being considered, very, very nice. Now, this is the balance sheet over at a Tesla. We do have cash and cash equivalents. I'm assuming they're including their Bitcoin in that cash and cash equivalents. All things being considered, the total assets sitting at about $55 billion. That's in line and just slightly up over where we were a quarter or two ago. From the liability side, everything looks pretty clean here. Total liabilities basically exactly the same as where we were the previous period. So all that is looking very well as I see it. Now, on to cash flows, looking really good. Not a lot of adjustments over at Tesla. So they pulled down a $1.178 billion net income. This is what, is kind of flowing through the press releases as well, is this massive net income earning per share number that they produced. Well, they get to add back in a little stock-based compensation, depreciation, those types of things. We get to $2.1 billion worth of cash flow in the quarter. Not as impressive as we've seen maybe over the last few quarters, but certainly on a year-over-year basis, you're up over 100% on terms of your cash provided by those operating activities. Now, here's our capital expenditures. I just showed you all those photos. Okay, they spent $546 million. Those photos obviously is like money draining out of the company. We spent $1.5 billion, but the type of growth this company is having, the type of opportunity that they have, I'm actually surprised they're not even spending more than this. Okay, we are seeing it accelerate a little bit. We were at $1 billion, $1.1 billion, $1.35 billion. Now we're up to $1.5 billion. So the expenses are rising from a capital expenditure, but I think investors understand that you are building this car company literally from scratch. And so you're having to build these factories. These factories are not already made for you. You're not buying out another car company to get access to some of this stuff. So this is very, very difficult to do. All things being considered, cash flows looks really well. The last thing I want to show you before we get over to the stock chart is this automotive gross margin excluding regulatory credits. So a lot of people will make note that Tesla does make a lot of money by selling regulatory credits to other car makers. So as Tesla sold their early EV vehicles, they got a bunch of regulatory credits from the government, and they eventually can sell those to other car makers because they've gotten so many of them. But I still want to show you that excluding that, okay, Tesla just selling its own cars is running at a 25.8% gross margin. And that is way up over anything that we've seen over the last couple quarters. And this comes in a tough supply chain environment for chips and all types of supplies to make these cars. And it also includes the fact that Tesla has dropped the price on number of their cars as well. So it just shows you this company is doing quite well. And if they can get everything lined up with this company, probably could be even more profitable than it already is. Now, from a technical perspective, not a lot to say here other than we are exactly where we were last Friday when we talked about this stock. Is we are basically in an uptrend, but we are coming against some overhead resistance. The stock over the last few weeks has not been able to get above $700. In fact, when we've gotten over $700, really since March, we have gotten rejected. So it's gotten up above $700 and come all the way back down to $550. And now we're kind of walking our way back up to $700. So this stock is either going to break above 700, and we could not do it today on earnings. We're looking for a candle above 700. Get above 700, 750, absolutely in play. The tops of these candles are in play. You'd like to see it get above that. If you get above 750, boy, you can ride this momentum all the way back, probably up to $850, $900 on this one. Now you get rejected here at 700. Wouldn't bother me in the shorter term. You're looking really for a break below these lows here, okay? Because we are still in an uptrend, okay? From a shorter term perspective, we are in an uptrend. Longer term outlook, we are more in a downtrend on this one. So it is kind of wedging out. It's really interesting what's going on with Tesla. The bulls and the bears are kind of fighting each other right now. And from a longer term perspective, we have a high, lower high, lower high. So if we go lower here, you got opportunities to pick this stock up 550 or less, in my opinion. We break higher here. Yes, 750, 850, 900 in his play. And I love the comments I got that saying, in summary, the stock's either going to go up or it's going to go down. And I totally get what you're saying here. But from a technical perspective, that is really where we're at with this one. The seesaw, so to speak, is not tipping one way or another. It's perfectly balanced right here at 670. The balance is going to tip one way or the other, either to the sellers or the buyers, or the bulls or the bears. And this stock is going to break one way or another. And I think it's probably going to break pretty hard. It's going to go, if it gets up above 700, I think it's got a really high probability of getting back up to 859, and maybe in short order. You break below it, and it brings back in a lot of price action down here, less than $550 per share. And I certainly would look to buy shares down in that range. Hopefully you guys enjoyed this video today. We'll be back with more this week. That was Tesla. Good luck with your investments.